Hi everyone, welcome to Your Values. Today we're going to look at Archer Aviation. So currently this is a company looking to merge with a SPAC called Atlas Crest Investment. And currently Atlas is trading at $13.68 and they're looking to merge at a valuation of $3.8 billion. So if we were to do the calculation and go, the base price is $10, and if you were to buy it at this $13.68, you'd be valuing the company at about $5 billion currently. The question is it worth $5 billion? Well, based on the EHang valuation, which is at $6 billion, I think it is worth that, if not more, since I think Archer Aviation offers just a bit more. And also they got $1 billion order from United Airlines, which is one of the biggest orders for the companies in this space. So I think it's a huge validation for the company, and also gives a huge reassurance that the minute they start producing their products, that there's already a company wanting to buy them. So the order is for 200 of their vehicles, with another option to buy another 100, which is pretty cool. Like, to already have those orders. And mind you, this company won't be producing until 2024, so it's a while away. And for United Airlines to be placing an order, it's kind of going that they believe in the potential and the future of this company. And in it, we'll go through some stats which will hopefully kind of give you some insight into this company, into the product, and what the future could be like. So if you are interested, you can basically be buying the SPAC Atlas Crest, and then once they merge, you will be owning Archer Aviation. Alright, so let's jump into the numbers. So they've got a potential addressable market of about $1.5 trillion. Shared mobility is about a $674 billion market, and we've got airlines, $177 billion, which takes us to that United Airline deal. And then cargo is $413 billion. And in military and defense is $12 billion. So clearly this isn't made for military and defense, but it's more shared mobility, airlines, cargo, and in, it potentially can rise up to as high as $3 trillion. I think these numbers are targeting around 2040, which is still a while away, but that's a large addressable market in that sense, though. And we have this chart where they have estimates. So in 2024, when they're first expected to start producing, they'll produce 10 aircraft. And in the year after, they'll produce 250. So you can kind of see, like, the initial year is going to just be testing. After that, they're going to ramp up in a very insane way. So you can kind of see, like, with 10 aircraft, it's 42 million revenue. With 250, it's 144 million in revenue. So it kind of specifies that the pricing is probably going to be around about 4 million for their vehicles. So as you can see, like, the amount they produce times 4 gives you a relative amount on the revenue. So it's slightly above 4 million in terms of the purchase price, I imagine. But eventually by 2030, this company thinks they can do about 2,300 vehicles, earning about $12 billion, which is, like, quite the assumption. But you might agree after we see some pretty amazing statistics. So they've done like a kind of a chart, Manhattan to JFK. And if you were to take your personal vehicle, you would have to pay on your own costs, and it would take 60 minutes. If you were to take an UberX, it would cost you $76 and 70 minutes, the extra 10 minutes waiting for the vehicle to arrive, basically. And then if you take an Uber pool, $59, 77 minutes. And if you were to take a helicopter, it would cost you $1,775, and it would take you 22 minutes. So imagine this, Archer, who basically, in a way, taking their vehicle is very similar to taking a helicopter, would cost you $50. And also, it's zero emissions too. So I guess that's a bonus. And it would take you 22 minutes. So not only is it cheaper than taking an Uber, it's much more cheaper than taking a helicopter. and yeah, it takes you $50 and 22 minutes. So in a sense, that's really compelling. They also do the stats on if you were to do ride sharing. Imagine you just like quit Uber to do like this. You would earn 18 times more revenue than doing ride sharing in a car. So they do some stats. If you do ride sharing, average distance 25 miles, average speed 25 miles per hour at a cost of $1.50 per mile. So even though it's cheaper per mile on a car, you imagine on a road you have to do these twists and turns where for them they just fly over everything, so they go straight to the point. And on a car trip it'll take you about 60 minutes. Trips per day 10. And then basically if you work 365 days a year, you would end up with $136,900. Now if we look at Archer's stats, if you were to do the same distance but more speed because you're in the air, 150 miles per hour, even though it's $3.30 per mile, which is at least double the cost of the car, but your average trip time would be 12 minutes. So people would pay for that more than they would want a car, because if something just takes 12 minutes, you prefer that over 60 minutes. And this is where it makes sense. Like, since you kind of you don't need as much time for each average trip, you end up doing more trips per day, 25 trips per day, and over a year you will generate $2.4 million. So if we go to that purchase price of about $4 million, basically this starts to pay itself off in about 18 to 20 months, which is pretty cool, right? Not many situations are you gonna see this and go, wow, potentially it would be a very high upfront cost. I'm not too sure there's many people that look into ride sharing and go, oh, well, actually we can buy this on a $4 million rate and then start flying people. Of course you need some licenses, I imagine, and but I mean, if you did do it just as like a job and earning $2.4 million per year, I think that's some justification. So I think now that you see that, you can kind of see that economics really starts to work out for this type of situation, because it looks like it's like, originally when I saw it I was like, potentially that's very expensive because it looks like a helicopter. But if they can justify their expenses to be like $50 for a 22-minute ride, then yeah, like there's a huge justification of the economics that this type of vehicle can succeed. So now we look at the competitors. So Archer isn't the only one in this space. As we did mention, EHang is right here, $6 billion company. Its certification is based in China, and their vehicles can only take 2 people. They're looking to do autonomous, and they're looking to do short distance tourism. Vehicles are easier they can be mass manufactured, very similar to Archer, and there apparently needs to be a battery energy advancement needed for their vehicles, and apparently they're very slow for their vehicle, whereas Archer, US certified, 4 people, it is piloted, but they are looking at being autonomous later on, I think after like 2026 or something like that, once they have some more data on their planes. And yeah, like they have key partnerships in United Airlines, whereas EHang does not have a partnership. So you do have companies like Joby who are partnered up with Toyota. I think that's Risk or something like that. The linking just doesn't help with reading that word. But they're partnering up with Boeing, and then you've got Volocopter, which is partnering up with Daimler. So yeah, like you look at this and you go, Archer actually has all the best stats when it comes to this. But of course, this is their presentation. This is their part to sell you on. So of course they're going to choose the best parts that make them stand out. But out of the most important parts, you would say Archer definitely stands out in front of all of them. So if EHang trades at like 6 billion, there's actually more justification for Archer to trade higher, maybe 7 to 8 billion or something like that, which would kind of value this company. It means at this current pricing, there's probably another 50% upside, which I could probably see this company going up to about $20. So yeah, like if EHang is around here, then Atlas Crest could potentially trade around $20, getting closer to the merger once that happens, because Archer just really stands out as the better company in this space, particularly as we look at the comparison between these companies. That yeah, I think there's more compelling features. It's more practical than most of these companies. And yeah, it's designed for mass manufacturing, as they say. They hope to do about 200 vehicles to 1,000 in their facility that they're opening in 2022. So I think that's the next milestone for this company. First they merge, next they're going to have their manufacturing facility, and in 2024 they start producing. And in 2026 they've got a contractor who they hope will help them accelerate their production to over 5,000 of their aircraft per year, which will be pretty extreme, and which starts to really produce some very significant revenues for this company. Because by 2030 they hope to do 300 vehicles at 12 billion for their revenue. So at 12 billion, I mean, it's a significant revenue, but of course, 9 years away, essentially, which is still quite a while away. So I don't think we can really count that, but would count the near term. And I think near term, it's going to be a long wait, but I think as it gets closer to this situation, this is going to be quite a valuable company, that in the future they could be worth, tens of billions, if not getting into the over 100 billion by the end of the decade. So that's kind of the situation where you look at it as an early investor in a high potential company. That is there some justification, but of course, it does come with a lot of risks because this company isn't that proven yet. It is not in production, which is the same thing with EVs. Then if they're not in production, there's always this whole thought that a lot of things can always go wrong. But I think, it's probably worth buying a little bit just to keep in the drawer and keep that potential in your portfolio. But again, it's not something that you really have to consider if you think it's too risky. I think potentially it does, this company or SPAC will rise closer to the merger, probably getting close to about $20. And I guess as each successive year continues to go and this company continues to perform, its valuation will continue to move upwards, particularly with this company being so good at what it does. And I think this $1 billion order from United Airlines just provides that strong due diligence and validation for this kind of product and company. And just looking at the stats that they've just provided for like ride sharing, I really think that there's a huge justification for it as well, that if they can make this work, it's very compelling. But yeah, I think that at the end of the day, that's just what they're projecting anyway. So, these things can always be different in reality. But yeah, let me know what your thoughts are, or if you've got any questions, post below. Until then, good luck investing, everyone.